So as the saying goes, it costs money to make money, and that's definitely true in real estate. When you're selling a house, there's going to be a few costs of sale that you're going to have to take into consideration. And chances are the highest individual cost of sale is not going to be things like staging and landscaping. It's not going to be real estate commissions. It's probably going to be capital gains taxes. And this is something that trips up a lot of people, especially a lot of first-time home sellers. People don't really know what this refers to, how to calculate it, but it's actually really simple. So first of all, what is a capital gains tax? It's the tax on the profit that you made selling a house. And the way you're going to calculate that profit is pretty straightforward. We take the net sales price. What did we sell the house for? Subtract out any costs of sale like real estate commissions. And then you're going to take the adjusted cost basis. What did we pay for the house in the first place? And add on to that the cost of any meaningful value add renovations like a new kitchen, new bathrooms. You're going to subtract that adjusted cost basis from the net sales price. That's your profit. That's your capital gains. Now, calculating that tax, there's two questions you want to ask yourself. First, how long have we owned this piece of real estate? And second, is it our primary residence? If you've owned it for at least a year, we're talking about long-term capital gains taxes. And that's going to be either 0%, 15%, or 20%, depending on your overall income level for the year. In New York State, we pay state capital gains taxes as well, but there's no long-term difference. On a state level, it's just taxed as ordinary income for the year. So that's the first question. How long have we owned it? Is it long-term or short-term capital gains? The second question is this our primary residence? If you have owned and lived in a house for at least 2 of the last 5 years, then that is your primary residence. And the cool thing about that is there's really hefty exclusions available to sellers of primary residences. If you're a single person and you're selling a primary residence, you can exclude $250,000 from your capital gains that you then won't be taxed on. If you're a married couple, you can actually exclude $500,000. So let's say you bought a house for adjusted cost of $500,000. A couple of years later, you're selling it for $850,000, $350,000 capital gain. You're a married couple, your exclusion is $500,000, so you're not going to pay capital gains taxes at all on that sale because you have a higher exclusion than what the capital gain actually was in reality. Now, it's important to always talk to your accountant about things like this. You might have a more complicated tax picture than I'm describing here. You might have tax loss harvesting available, things like that. But in a nutshell, this is how capital gains taxes work. It throws a lot of people off, but it's actually really straightforward, and it's important to understand these things. If you're thinking about selling a house in Westchester County, do not navigate this process alone. There's a lot of moving parts, and you deserve to be confident and clear about the process. Click the link in the video description to schedule a consultation call with me today. We can put a plan together to help you sell on the time that's right for you with minimal stress and maximum profit involved so you can move on to the next chapter of your life. Thank you very much. We'll see you next time.